going to leave us a new area here of supply. And that is basically what we're going to do when you're looking for your supply and demand zones, understanding the use of market structure with supply and demand. Today, I'm going to focus on a use of supply and demand with market structure. Now, what I mean by this is we're going to look at where that break of structure occurs, and then we're going to be able to see where we draw out these areas of supply and demand. So let's have a look at this move down. We can see the market's been quite bearish. Now, the simplest way we're going to do this is look for that market structure shift. Now, that happens when we see the market at this area to start with its previous high. We can see we have a shift in market structure. Zoom in. So right here, we can mark this out as what we call the break of structure. Now, we class that as shorthand as BOS, break of structure. Now, it is also a market structure shift. Now, when we see this candlestick pushing down here, we have here areas of demand as the market continues to push up. So as soon as we see this push down, we can mark out an area here of supply. So we have an area here of supply. Let me just mark that out again. Bearish zone. So we can see the market comes down. We fail to break it. We pull back. We make a lower high. And then we break out. Now, this is the last move to the upside. So this is what we class as an area here of demand. That demand is broken same time as we see this market structure shift. Now on the way down here, we have a rally base rally area here of demand. It's what we call a basing area of demand. And it's very obvious to where the market's going to want to go to when we get an entry out of this area of supply. That's going to be the first area we expect the market to most potentially want to go to take out this area of demand. So if we were looking for a sell up here, and let's just place on a sell order. We placed a sell right here, understanding that this is our first market shift. Where do we expect price to want to go to this area here of demand? Now, we can either look for a target that demand zone, or we can just look for it at the full zone to be taken. Either way, you can see the process of what we're looking for using a market structure shift and applying the area of supply and demand. So again, here we have an area here of demand. Just mark all these out. Another area of demand here. This again is more of a push up, pull back. It's a swing low. We mark this out as a demand zone as well. Again, the one above is a swing low. This is what we call more of a rally, base rally. Now on the way up here, we can see that this is a market structure break. So there's a break of structure to the upside. Again here, this is a market structure break. And then we have this pause in the market where we see this rally, base rally. And again here, there's no market structure break to the upside here. So when we see these sort of zones, and this one here, they are more likely to be broken fairly quickly. And these zones may well act more of a potential resistance because these zones are off a swing low. Now we can see the market comes down into this one. We do have a bullish response. So when we see this momentum push here out of this area of demand, it's no surprise we're going to see a reaction. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order. And it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. So again, when we're reading price here, look for those momentum candles with that market structure. So we can see here we have a nice momentum drop down. We have a move sideways, another nice push down here. That's going to leave here an area of supply. So we could draw out another area of supply from this area like this. The supply and demand zones are just areas, okay? Areas where we expect price to want to come back to. You do not have to have these perfectly accurate. As long as you have them in that zone, this area where we see the build-up of price, we can see there's a sideways motion here. And this is the zone what breaks it. So we have a zone as well up here created of supply. Now that's not actually been tested except for this one bearish candle. We see a wick up into that supply then drop away. We do wick through this supply zone, but we don't close it. It's more important to see a close through a zone to know it's going to fully break. So price actually held at this area of supply. We drop down and you can see we break this zone. Now that is what we call again another break of structure. So if you're new to the term of break of structure, that is what we're looking at when we see the market break through this swing low. So we have this swing low, pull back into supply and a breakthrough. Now when we see this again, we do create a nice area here of supply that we can draw out once again. So we can see the market bounces off this demand zone. What do we have below? Let's just use this zone. Again, we'll have another zone down here. So we can mark across. So again, this is a break of structure. We can mark out from this swing here. Another break of structure to the upside, and we break this swing high as well. So that's when we look at the break of structure where we leave these areas of supply and demand. Now the market here does eventually break through, okay, removes this area of demand as well. That means we can draw out an area of supply. Now we do come down into this area, pull back, and we break out with this zone. Now this is very quickly removed. Now what is happening right now is we can see price moving sideways. We are creating areas here of demand as price makes this move up. Just get this in the right place. So we have an area here of demand which is created when we break this area of supply. Now we do, again, like I said, have an area of supply here as well. So around about here is an area of supply. So we can see price comes back to that supply zone. We pass through like we saw here, but we don't close it. So there's an opportunity to sell. Where could we sell through to? Well, we could sell to this area of demand down here. Okay, so we have a break of structure again here in the market. So let's just remove these areas of demand now. We don't need them on the chart. So we break through to downside. We haven't yet broken any more to downside. So what we can see from this is that this is actually a good supply zone. If we remove this supply zone, and what we get now is a break of structure to the upside here. But we still have this area of supply we're inside. So we can expect a bounce off this area of demand back up to this area of supply. So you could call an entry here up to that supply zone, and then we have a nice wick through for potential sell back down. Now we do wick up into areas of imbalance, but that's not what this video is about. This is about just to teach you, if you're new to the concept of supply and demand and market structure, and understanding the break of structure at the same time. So just move sideways. We can then see that this area of demand is in fact removed, and price goes and does bounce off this area of demand. And then eventually we do close through, so move it across, we close through here. So we close through on this area of demand on this move down, which is going to leave a new area here of supply. So we can see the market comes back into supply. And once again, we then drop down. We react off this area of demand. So again, we need to look at where our market structure shift is, and that is our break of structure to the downside. Again, let's remove this area of demand, and then the market comes back down, pulls up, and then we break through once again. This leaves a new area here of supply. Now notice these supply zones are getting wicked through, but we're never closing through the zone like we see on the move to the downside. So again, we can draw out a new break of structure here, removes this area of supply. So we continue to be supply is in control. See how we look at these zones which break through. So once again, what do we have here? We have another supply zone. So the reason we see this supply zone wick through, because it's just going into the supply here, deeper into the supply above. This is our break of structure to the downside. So we then have another break of structure here, which creates this area of supply. And we continue doing this. And we don't quite have a break of structure until here. So on this occasion, we can witness that our break of structure is in fact moving down here. I would say more. Let's just get this exactly right. So that is our break of structure to the downside, which leaves a new area here of supply. Market again just wicks through that supply zone, but we never close it. We still have supply in control. And we just move forward. We can then mark out a new area here of break of structure. So hopefully you're getting the concept of how we're looking at those breaks of structure with market structure and supply and demand combined together. Is how you can simply draw out your zones, and these are the best zones for you to be drawing. So again, we have another area of supply here. So this supply hold, all the supply zones are holding price. We're not getting those closes through. So move this across. And this is going to be the first time we have actually seen a break of structure above this swing high of this area of supply. So what does that mean? That we can now actually draw, because we never go any lower than this low. This has not been broken to the downside. This is the first time we can now again draw a break of structure. Remember the last time we did that was over here. We saw the market come back up and break through. So if we now just remove this area of supply, we'll remove this supply zone, where we're going to draw area of demand. We're going to draw area of demand here. That's our demand zone that we're going to use, understanding that that's where the market's going to be running up from. So we do have a minor break of structure here. Again, right there is another break of structure. This is simply reading the markets as we're going along with price. So again, we have another area of demand here. Now you can see that this demand zone is removed, and that is removed with an area of supply here. Now sometimes we're going to find we're going to have patches like this where the market is going to be a bit choppy. We're going to go up high. What we're doing here, you can see that we actually remove this area of supply. We can bring this one across. Do we remove that supply zone? No, we don't. We hold that supply zone. So all we've actually done is gone deeper into this zone. And that's how you can start to see whether the market is going to continue to break up. So we see there, we potentially get out of sell. If you understand what's happening here, the market breaks structure again to the downside, removes that area of demand, which leaves a new area of supply that we've drawn. So let's just get this in the right place. So this is our new break of structure. So remember, this is all about supply and demand and market structure. So we now have a area of demand here, which is broken. We can see that. And we do have here a break of structure. It's a very small break here, but it is a valid break of structure. That's going to leave us a new area of supply that we can draw out here. This is another area of supply zone we can draw. So we have broken structure. So we can now remove this area. Instead of this low, we've got this low which has been broken. That's our break of structure to the downside. So we're looking for any pullbacks here, and the market basically breaks structure to the downside again. So what is that going to leave us? That's going to leave us a new area here of supply. And that is basically what we're going to do when you're looking for your supply and demand zones. Understanding the use of market structure with supply and demand, you're going to be marking out those breaks of structure to downside with those swing points, marking out your supply and demand zones. Remember, if we see a wick through an area of supply like this, okay, as long as we're going to close through that zone, then we haven't taken that zone completely out, and that's not a valid break of structure in this type of method. So we're looking for the market to show us these wicks through, like we can see on some of these occasions, where we're going to see a continuation with that trend. we break structure again. Now, often you're going to see these types of wicks when we see a break of structure to the upside. That's when you potentially see that again, a break of structure to the upside, where we see a trend forming back to the upside, just going higher into an area here of supply. So I hope this type of strategy is going to help you with your trading going forward. It is a type of strategy that I've used for many years. And if you combine this with targets that I've just gone through in that FSL video, which is the first structure level, in that video, you'll learn exactly how you can take profit targets, combine it with this strategy, and you've got a winning strategy with supply and demand, and you can use for decades to come. Now, if you want to watch that video, it'll come up at the end of this video. But right now, if you want to learn more on how to 10x your growth with the use of that 2 time frame approach, which we went through earlier on in this video, then you can head over there right now and hit the link above.